2 weeks in a row with inventory climbing, and price cuts sure seem to be accelerating. These are market slowing characteristics, and they seem suspiciously coincident with the spike in mortgage rates over 6% a couple of weeks ago. Our forecast model expected inventory to rise this week, so it's not a big surprise, but it is a little signal worth paying attention to. The forecast model has a few more weeks for inventory to rise before the fall reset. My interpretation here is this. Home buyers are very sensitive to mortgage rates now. When rates spike, it quickly removes a group of buyers from the market. And so we quickly see fewer offers. Sellers notice this, so we see more price cuts. And we have fewer homes going into contract, so inventory builds a little bit. They're nuanced changes, but we're watching them week to week in the data. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, right now might be the time to step up. Go to altosresearch.com and book a free consult with our team, because everyone is worried about what's happening right now, and they need you to help them see clearly what's going on. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's what the data looks like for the week of September 26th, 2022. Available inventory of unsold single-family homes rose for a second week in a row this week. There are now 557,000 single-family homes on the market, unsold. That's less than 1% increase week over week. And it's not totally unheard of for inventory to rise a little bit in September, but it sure feels like home buyers are reacting immediately to that jump in mortgage rates 2 weeks ago. Inventory is 27% higher than last year at this time. Still 42% fewer homes on the market than at this point in 2019. So we can really see the inventory spike in the biggest boom bust markets like Austin and Phoenix. So we could see that happening now. And this, me, feels less like seller panic and more like an abrupt slowdown in the buy side, the demand side. So that leads to buildup in inventory as the houses are unsold. You can see this trend in the new listings chart. We've had a couple of weeks with a little uptick in the unsold new listing volume. These are the homes that were listed and stayed on the market more than a few days. The immediate sales phenomenon is we've been talking about, during the pandemic boom, made the dark red line here stay low all year long, or at the beginning part of the year. Each line here is a year. And so as buyers slow, we can see the little uptick in the new listings that stay on the market. If economic uncertainty or rates or other macro influence were causing home owners to want to sell and get out, then you'd see the dark red line rising faster here. That's my interpretation. In other words, you can see earlier in the year, in May and June, that's exactly what happened. So people were considering selling their homes sometime in the summer of this summer. Many of them hurried to list in May and June. And so you can see that new listings line, the dark red line in May and June, finally climbed above the recent years. But that's not happening now. So this is a signal to me that rates are directly impacting buyers, but the seller motivations haven't really changed. If you've been paying attention to our inventory forecast model, you'll know that we expected inventory to climb this week. The increases of a few thousand homes is less than 1% of the inventory, not a big change. In this chart, each bar is a week. The bars above the line are weeks when inventory climbs. Below the line are weeks when inventory falls. The dark blue at the right end of this chart are this year to date, and then the brown is the forecast week by week through the end of the year. You can see a few more weeks, the brown line's above the line. So you can see a few more weeks of rising inventory, just little bits, and then inventory starts falling in October. I included this chart this week because I wanted to highlight the comparison from now to 2018. In the fall of 2018 was also when we had rising mortgage rates. And that year, inventory also rose in late September. So mirroring 2018, you should expect inventory of unsold single-family homes to grow a tad more in the next few weeks until mid-October. If changing economic factors start to frighten homeowners into selling, and we see inventory rising, for example, later in October, that would indeed be unusual and something to pay attention to. So for now, we're keeping our inventory forecast at about 470,000, 475 maybe single-family homes on the market at the end of the year. So if we expect to start 2023 with 470,000 homes on the market, that's actually much lower, much fewer than we were expecting, based on the trends back in June and July. But that trend has now tapered off. So we're keeping our forecast steady for now. Still, expect this is a shortage. So even as buyers slow down, we still are in a shortage scenario. Too few homes available for sale. The median price of single-family homes in the U.S. this week is $439,000. That's down a fraction from last week, which is precisely as you'd expect for this time of year, down a fraction each week. As I've been pointing out lately, the negative pricing pressure is clear in the boom markets, but across the country, most markets aren't under tremendous pricing pressure. There's no sign in the data for rising home prices next year, flat at best. And if rates rise further, or if recession hits deeply, or other big macro factors, you could imagine scenarios where markets slow down further from here. Because we can see the impact of rising rates so immediately in the data, you could imagine if rates climb further from here that we'd have more to adjust in pricing expectations for 2023. Expect the median price of single-family homes to step back each week until the end of the year, closer to 415 or so to end the year. Price reductions sure seem to be accelerating with that recent spike in mortgage rates. So this week, 41.2% of the single-family homes on the market have taken price cuts from the original list price or in the last few months. The pace of the price cuts leveled off in August, but they accelerated again in the last couple of weeks. So price cuts climbed from 40.6% last week to 41.2% this week. Typically, price cuts don't peak until October, but it's usually small adjustments week to week. This is visible here in the dark blue line, so that's 2018, which we've been talking about. 2018 had rising rates. Rates in 2018 rose from 3.9 to 4.9%. And you can see how price reductions adjusted. This year, rates have spiked much more significantly, much more aggressively. And they spiked again from 6 to 6.5% a couple of weeks ago. Then pop, we see price cuts tick upward at the same time. The regions with price cuts in the upper 50s or even low 60%, those are pretty bearish signals for home prices over the next year, and it's definitely something for us to keep our eye on. Most homeowners in these markets are fine, they have a lot of equity and they bought a while ago. But for those who bought at the peak and then maybe next year face job losses, is this potential recession rolls in, there could be some pain there. That's a small percentage of the market, but you can imagine it would be painful. So for buyers in these markets, the selection is improving, but also the seller worries that they have missed their window. So these are buying opportunities we have not seen in this country for many years. It's going to be really fascinating to hear anecdotes of buyers finding deals or how they're approaching the market as this market changes. I'm really looking forward to some of those, hearing how that plays out individually for folks over time. If you have buyers and sellers right now, make sure that they have the data so that they can see for themselves what is happening in the local market in real time. This market is moving so quickly. We can see the instant impact of rising rates, for example. So your buyers and sellers need to know that. Go to altosresearch.com and sign up so that you can get the data in your hands and the hands of your clients, your buyers and sellers today. There's a link to Altos in the description below. Just click that and join us. Your clients are counting on you. So that's all the time and the data we have for this week. New Top of Mind podcast comes out Wednesday. This is a good one for market watchers. The data geeks in this crowd will enjoy this one. We'll share those details on Wednesday when it drops. Keep your eyes open for that. That's all the data we have time for today. More next week. Thanks.